Eric Muathe at muathe.com for September 10th and September 11th, 2016. Let's take a look at markets here. Asian markets were closed, let's call it mixed. As you can see, mixed pictures. Some markets were up, some were down in Asia. Let's take a look at Europeans market at the close of Friday's session, and I believe they were down. Let's call it about 1% across the major averages in Europe. Take a look at the Americas with about 1 hour to go before the close of Friday's session and the conclusion of the week. And we can see that the Brazilian market is down about 3%. Canadian market is down about 1.7%. Other markets are also down. And take a look at the US market with about 1 hour to go, again before the close of session on Friday. And we can see, let's call it about a 1.7 to 2% drop on the major averages. We see that oil is down about 3%. The VIX is up about 30%. Let's take a look at those charts. Let's begin with the Australian market, as we do most of the weekends. And what we're looking at here is we're coming back to the same conclusion here, that this is a market that needs to prove itself on the long-term monthly chart. This is a monthly chart going back to 1999, and there's a couple of things to consider here. You can see the top side resistance. You could draw it like that on the monthly for the Australian market, suggesting month to month this might have already seen a major sell signal. So that's one consideration. The other one is this backtest line. Now keep in mind, this line was the break point here off the highs of early 2015. And if we extend the same line, you can see the market has hit that level over the last 2 months and is pulling back. So this is a chart that should be a little bit of a worry for those who were expecting the Australian market to be trading higher. This here presents a problem until such a time as the market can move above those two lines. This market should be at best sideways, and at worst should be setting up for a major correction. Now if we take a look at the daily for the Australian market, and there are some markets that are showing the same type of daily chart, you can see that there's some hope that this line here connecting the lows on the daily RSI could hold. So you can look at this way. Right now what we are seeing is this is becoming resistance short term. So the market does need to reclaim above this RSI support line if there's going to be any bounce. Now you can draw this line slightly lower than that, and let me just try that. And so take the lows, absolute lows, and just draw a line like that. You can see that this is where it needs to hold. Otherwise, if the market breaks that support line on the daily, and considering that the monthly chart is already showing bearish setup, this might be where it breaks the current uptrend and starts seeing a major slide. So this line on the daily needs to hold if there's going to be a chance of a short support zone here and a bounce. If we take a look at the Chinese market, we can see that it still continues to struggle as it tries to hold above this line. Now this was the break line, and we discussed this over the last couple of weeks. Once we broke through here, market's been lower. We did see resistance on the backtest failure there for the highs there, and as of right now this has been hit a couple of times on the weekly. Still the market has been unable to move that. So we can see that on the weekly for the Chinese market, until it can clear this line, we have to assume that the market is sideways at best. Otherwise, confirmation of resistance on the line might suggest that with confirmed resistance, the next major swing trade is also going to be lower. Of course, market bulls would like to see a breakout above the recent weekly closing high for 2016. So right there, and we can see that that level that the market would need to break out above is at 3108.10. So personally, I would think there's no need to be looking for a bullish advance in this instrument until it can clear this level, especially given that the RSI is still showing resistance. So more than likely, without a breakout here, the next swing trade here is going to have to be lower. If we take a look at the Japanese market, we can see that on the daily, we had come back to test the top side of the daily RSI, and already the market was showing resistance here, and especially given the weakness on markets late Friday, or at least late after the close of the Japanese market, more than likely this might lead to a correction here. So this is resistance, and also we can see that it is coming back to test the break line. So this break line here is also what is being tested, as you can see. And right now we've hit that level and the market is pulling back. So day to day we can see resistance. One can expect a pullback after those two lines confirm resistance. If you take a look at the long term, let's call it about a 5-year weekly chart, you can also see, just like the Japanese market, backtest failure. If you take the lows line and just extend it out, you can see that ever since we broke through that line here, this has been a problem for the market. Here we went above the line and back below it with uniform action, which made that a sell signal. We hit that line there for the sell signal there, and now we are coming back and we seem to be forming a nice double top resistance on this backtest line. Net looks like more than likely this market is also pointing down short term. Keep in mind that you might see a big down week, because the RSI moving below 50 generally generates a big drop. So expect a big down week if the RSI on the weekly moves below 50. If we take a look at the Nifty, we can see a couple of things here. Number one, we were watching the 2015 monthly closing high here to see whether the market had enough momentum to break out and stay above that threshold. So really we need to see for the new week if the market can still hold above 8844.60, which happens to be 2015's monthly closing high. Staying above that would be bullish. Otherwise, failure to hold above that and moving below that would suggest a failed monthly breakout, which would be bearish. Now keep in mind, we've been discussing the idea that if the Nifty turns red for the month, so if it's down for the month, that might suggest that the monthly charts are also turning down here on the RSI, which would be a major sell signal, because that break would be coinciding with the recent break. So this RSI trendline break here. So the break here brought the market off the highs of 2015. So reversal around here would not be good, because it would be confirming that break line. Resistance here would suggest a major change and now a bearish environment. In fact, if you take a look at the long-term monthly chart for the Nifty and you draw the line, so the break we're talking about is that break. If you extend the same line backwards, and I've been talking about this for many months, over the last couple of years, every time you can see this drop in 2000, the break below that line led to the beginning of a major bear market. And again, we broke below here for the beginning of another major bear market. We hit this level twice for the highs here and another drop on a monthly chart. And so you can see that if we fail, just like we did here, failure around this level is not good. The markets would be turning bearish at that point. So if the market turns red for the month, be aware this could be a serious change in the sentiment and direction of the market. One other observation is that the market this past week was doing its best to break out above 2015's weekly closing high. So we can see that this 8937.75 is the highest close from 2015. So the market did trade above that this past week, but did not close above that. That makes that a failed breakout on the weekly, again adding another layer of potential for reversal. So a failed weekly breakout is not a good sign. So we start seeing that here. If you combine the monthly chart and the weekly chart, things are starting to look like they are now pointing to the possibility of some type of a major pullback. Otherwise, market bulls would need to push the market back above this breakout line of 8937, and would also need to push the monthly chart above 2015's monthly closing high. So again, without weekly breakout confirmation, these markets are starting to turn a little bit on the bearish side, if not a lot on the bearish side. Keep in mind, this past week, the Indian market is not the only market that failed to break out. We can see here the South African market did not successfully break out. There was an attempt here that failed, another attempt that failed, another attempt that failed again here, and this past week again. So multiple attempts to break out on the weekly chart that have been unsuccessful. We can see here that the South African market is also seemingly set to point down. Take a look at the French market coming into Friday's action. We can see that the market was back to showing resistance here. In fact, we can see a double top over the last couple of days before Friday's drop. So this is confirmation of resistance on that red line. And also on the daily for the French market, we can see that this was the break of the highs of late 2015. And we can see that since then, since this break, market's been struggling to hold above this level. So you can see that every time we hit that line with uniform activity, we do make short-term highs, just like we did here for the highs there, and even recently here for the highs there, and now coming back and showing this double top rejection on that blue line. So those two lines did offer resistance coming into Friday. And if you take a look at the German market and take a look at the weekly chart, we can see that the weekly chart was coming back to test the break line off the highs of 2015. And after the drop on Friday, we can see that the market is confirming double top rejection on that red line. So we can see resistance right here and again here on a weekly chart, suggesting that a pullback is now in play. And what really makes it a little bit of a problem again is on the monthly charts. For example, take a look at the Footsie as a representative for the European markets on a long-term basis. And here we have all data on a monthly chart going back to 1990, and you can see that there's some type of a problem here because the chart itself is showing that on the monthly we are back to test this top side resistance, which is a problem right there. And also we are coming back to test the break off the highs of 2015. So this break here, you can extend it out this way to see that right now we are coming back to a back test of that line. More than likely, the way things are setting up, it looks like resistance here. And there's one other way you can look at this, and is just to draw our uniformity line. In other words, figure out where the most recent break took place. So we can even draw it there, draw a line this way. You can see the market has rejected the Footsie every time it tries to move above that level. As you can see, double top rejection here during the highs right here. And over the last couple of weeks, it's come back and is potentially showing resistance here. In fact, if you go backwards on this line, you see there's a problem developing here. All the major drops in the market have began at this level. Break below this level here off the highs of 2000, and this huge bear market developed. We broke below here, which is this period for a major drop in 2008, early 2009. So the problem here is if you combine all those resistance points, again we go back to the top side resistance, and then also you come back to the backtest failure line. All those are taking place right now, right here. So month to month, we see the evidence here that markets don't look that great. In fact, one can make a very strong case that as long as world markets are negative for the month, we can start looking at the possibility of a major bear market developing. Take a look at the Canadian market, and again, we go back to some of the things we just discussed in the previous chart for the Footsie. The first observation on a long-term basis, this is a monthly chart going back to 1990, is this backtest line Of course, we know that ever since we broke through that trend line, market's been off those highs. So we are coming back here in September, August of this year, and we seem to be showing resistance. That's not a good sign. So that's one consideration that looks bearish as of right now. That's why I keep saying negative markets for the month is not a good idea here. We can also see the break point of the highs of 2050 is being tested. So we broke through here. Market hasn't been back to those levels. We draw a line from here. And as of right now, you can see that this is already being confirmed as monthly resistance, which is a major sell signal as long as it is down for the month. In fact, if you go backwards and test some of the major drops, for example, this drop period here began once we broke through this level. There's another major sell signal here for this major move lower. You can see here rejection on that red line, and again here uniform activity above the line and back below it for the highs there. So we can clearly see that what's developing here is the possibility of a major change, and the fact that you add the other line, all this coming in contact with these resistance levels, suggesting now there is a possibility that markets might be in the coming months down substantially. In fact, let's take a look at the Brazilian market by way of the EWZ, or the ETF that trades in the US. And what we see here is, if you take the recent highs on the monthly chart, all data monthly, as of right now, this is something I've been talking about. This has already shown it is coming back, and after a nice move off the lows of early 2016, nice rally over the last couple of months, but now we've come back to test the top side, which is not a good sign. And there's also another layer of resistance that we've been talking about, which is off the break here. Once we broke through here, market's been down off the highs of 2011. So we draw a line from there, should be something like that. You can see that this was resistance here for the highs of early 2012, resistance here for the highs of mid 2014, and now here for the highs of mid 2016. So you can see that without picking sides, the monthly charts, as long as markets are negative for the month, those monthly charts right now are suggesting to expect a major pullback, if not a major bear market in the coming months. Eric Mwatha with Mwatha.com. As always, good luck, peace, and blessings. EACS. Mwah. Yo. Hey. Woo. Yeah.